Boomers love to go shopping, and as a result, shopping malls are back on the rise. Hi, Paul Morrow, Smart Financial. Let's talk about these portfolio building ideas. One of the portfolio building ideas is to have 10% of your portfolio in something called alternatives or alts. It means something that's not stocks and something that's not bonds, and real estate qualifies. Let me just quote to you the numbers on the real estate market surrounding shopping malls. According to CNBC, there are more people going to shopping malls now than pre-COVID. Black Friday is still a big deal, and families like to go shopping at the malls. How can you invest in shopping malls without going down the road and buying your local shopping mall for a lot of money? Well, you can buy something called a real estate investment trust, REIT. Let's just talk about a few mutual funds that invest in the retail shopping space. When you buy a mutual fund, you're putting money in, you're letting the manager of that fund sort of choose the individual stocks in different places rather than you going out and buying direct real estate. A real estate investment trust is a fund. Some of them pay dividends as much as 4.5% to 9%. Real estate investment trusts, REIT, is an income producing asset. And here's just a couple of them I think that you should look at if you're thinking about investing in the growth of shopping malls. Let's talk about two favorites. You know, I like Vanguard funds. I own Vanguard funds. Here's the symbol, VCDAX. They have investments in shopping malls where people are going and they're spending money in stores the old-fashioned way, walking in, looking at a bunch of shoes and clothes and walking out with a package under their arm. It's very retro, but it's very popular with what? Boomers. And the boomer crowd is the crowd that has the most disposable income and the most TIME. The second fund I think you should take a look at is the Fidelity's FSCPX. This is the Fidelity Select Consumer Discretionary Fund. So Fidelity and Vanguard, both fine fund companies. I don't work for either one of them. I'm not suggesting that you call me up and buy these things. You can't do that. You should talk to your own personal financial advisor about this and how a brand name fund company who's in consumer discretionary or a great REIT like Federal Realty Investment Trust. These are three ways that you can play the boom in shopping. Also, add that extra 10% to your portfolio of alts. Now, some people are adding gold. You can buy some gold. That's an alternative. Precious metals, commodities. I think it's a very attractive time to look at the rebirth of the American shopping mall. If you're traveling and you're in Milan, Italy, go to the Galleria. You may have seen my wife there. We were there looking at the shopping mall. It was a beautiful creation. It's still in operation today. It's still a beautiful, exciting place to go. I'm a big believer in shoppers coming back. I'm a big believer in people wanting to get out. Now that we're post-COVID, we want to go out and see people and get social. And maybe that includes going to a store in a shopping mall. Stay in touch with us. Subscribe to the channel. Just click on those buttons below. Join us for the podcast and follow us on YouTube. We'll tell you more creative ideas that you can add to your financial life that fit into what you really like to do. Adding to your portfolio alternatives is just part of the art of being smart.